Hello everyone, welcome to my YouTube channel. In this video, we are going to talk about Varun Beverages Ltd, what is their business, how they have performed in the Q2 of this calendar year, and how is the road ahead for the company. So Varun Beverages Ltd is an Indian multinational company which is into manufacturing, bottling and distribution of beverages. It is PepsiCo's largest franchisee outside of USA. So it is responsible for manufacturing, bottling and distribution of PepsiCo products. So let us know about VBL. VBL has been associated with PepsiCo since 1990 and it produces beverages like Pepsi, 7-Up, Mirinda, Mountain Dew, Sting in the carbonated soft drink category, and in the non-carbonated beverages it produces beverages like Tropicana, Gatorade, Slice, Nimbus, etc. So we all have basically tried these products. And then they have a third category wherein they also produce packaged mineral water under the brand name of Aquafina. So they have a total of 50 production facilities. Out of these 50, 38 are in India and 12 are in their international markets. So right now they have a reach of 4 million retail points, and in these 4 million retail points they have placed visi-coolers in 1.15 million retail outlets. Now these visi-coolers are nothing but refrigerators which we see in restaurants which will have the cold drinks in it, right? So this is nothing but the visi-coolers. So let us talk about the complete brand portfolio. So as I told you, in the carbonated soft drink section, they manufacture products like Pepsi, Sting, Mountain Dew, Mirinda. Then in the non-carbonated beverage segment, they manufacture brands like Tropicana, Slice, Gatorade, Nimbus. Then in the water segment, they have a brand called Aquafina. Apart from this, they also manufacture the snacks under the trademark of PepsiCo, that is Cheetos, but it is not in India, it is in their Morocco market. And in the dairy segment, they have a brand called Creambell. So like most of their products are under the trademark of Pepsi, but apart from this, they also have their own brands under which they manufacture some carbonated soft drinks, energy drink, packaged drinking water and a dairy based beverage. I'll place an image of the complete product portfolio. You can hit pause and you can have a look at all the products that are manufactured by VBL. Talking about the partnership between VBL and PepsiCo, so they have been associated in a partnership since 33 years, and 90% of the sales volume of PepsiCo products in India comes through VBL. So this shows that VBL is a very strong partner of PepsiCo, and the partnership has been going on for more than 33 years. So in this partnership, what is the responsibility of each of the entity? We will see that. So what are the responsibilities of VBL? So VBL is responsible for manufacturing, bottling and distribution of the PepsiCo products, that is nothing but the beverages. Then they are also responsible for expanding the retail outlets. Retail outlets are nothing but the grocery stores or the restaurants where these VBL products can be sold, like the cold drinks can be sold or the snacks can be sold. Okay, these are nothing but the retail touch points. And they are also responsible for placing the visi-coolers in these retail touch points. Like they are responsible for identifying those retail points where the sales is good and where they can strategically place these visi-coolers in those retail touch points. Then they are also responsible for local level marketing, like the store level marketing or the below the line marketing, that I can say. Now coming to the Pepsi side of the partnership. Now Pepsi is the one which will own the trademark. Pepsi will provide the formulation through concentrate. Like Pepsi will not disclose the entire recipe or the ingredient for manufacturing these products, but Pepsi will give the concentrate through which their products can be manufactured, like Pepsi and rest of the products can be manufactured. So the complete recipe is not shared with VBL, otherwise VBL tomorrow can start manufacturing their own product with the exact taste and feel of PepsiCo products. Then Pepsi is responsible for the packaging, branding of these products. So Pepsi is the one, or PepsiCo is the one which will decide like how each of their products will look, what colors they are going to use, how should the packaging be, and what logos they should be using. So it is Pepsi who is going to determine this in their partnership. Pepsi is also responsible for the R&D part. So Pepsi is the one who will come up with new products. If they have to make any changes in their product, whether they want to reduce the percentage of sugar in their product, or if they want to make any changes to their ingredient, it is Pepsi who will decide that. VBL does not have that liberty. At last, Pepsi is the one who will do the ATL marketing. Pepsi is the one who will do the brand building and related marketing activities. Let us look at the financials of quarter 2 calendar year 2025. So in the quarter 2 of this calendar year, the revenue has come down by 2.5%. Their EBITDA has gone up by 0.4%, and their PAT, that is profit after tax, has went up by 5%. Now the revenue has dropped because of early monsoon in India, because we have seen like this year the summer was very short, and it was not very intense also. So because of which the sales did not happen properly, and these products are mostly consumed in summer, and since the summer was short and we had a early monsoon this calendar year, so because of that this entire quarter was a washout for VBL, and the same can be seen from the results as well. Now talking about the volumes, so in this quarter of calendar year, the carbonated soft drinks has contributed 75% in their sales volume. The non-carbonated beverage segment has contributed 17%, and the water has contributed 18%. The company has been able to consistently increase their EBITDA from calendar year 2021 to 2025. It has grown from 18.8 in 2021 to 25.9 in the first half of 2025. The profit after tax margin is also consistently increasing since 2020. Like in 2020 it was 5.5, and from there it has consistently increased, and today it is at 16.3% in the first half of calendar year 2025. The debt to equity ratio has also come down drastically. The company is currently cash rich, and the net debt to equity stands currently at 0. Now let us talk about some updates from quarter 2 of calendar year 2025. The company has announced that they would be setting up new plants in India. So they would be setting up 4 new plants in India. They would be in Prayagraj, which is in UP, Damtal, Buxar, and one in Meghalaya. So these are the 4 plants that the company is coming up with. So basically they want to improve their distribution. So in markets where the distribution is not efficient, so they are placing these new plants there so that the distribution can be optimized. They have also started production of Cheetos snacks in Morocco, which is a big milestone for the company, as snacks being a high margin product for them. So in Sri Lanka, the company has acquired 50% stake in Everest Industrial, which is a company which manufactures VC coolers. So this will help company in fast placing the VC coolers in those retail outlets where currently VC coolers are not present. So what is this importance of placing VC coolers? Let me tell you, like, these cold drinks, people normally like it if it is chilled, and it is in order to increase the sales, the company will have to place the VC coolers in the retail outlets. Only then the sales will increase. If the VC coolers, or in other words, if I say in simple words, a refrigerator is not present at a particular retail outlet, then the customers normally do not tend to buy products or beverages from there, because they like these products chilled. So it is the company who places the VC coolers in most of their retail outlets as well. So currently, as I had already told, that company has a reach of 4 million retail outlets, but out of these 4 million retail outlets, only 1.15 million retail outlets have VC coolers in them. So there is a good scope for the company to continue placing these VC coolers in rest of the retail outlets. Talking about the growth potential of this company, management tells that in India there are 12 million retail outlets that they can reach out to, out of which they are currently present at only 4 million retail outlets. So there is a good headroom according to the management, that they feel that there is a huge scope for expansion for them. But personally talking, if you ask me, we also have to look at the addressable market for them. Now, out of these 12 million retail outlets, we cannot say that all of these 12 million retail outlets would be an addressable market for VBL. So even if I consider at a conservative level, even if I consider say 2/3 of these retail outlets is an addressable market for VBL, then we only have 8 million retail outlets which is addressable for VBL, and today they are present at 4 million retail outlet, which means there is expansion scope of only 2x. So I, being a retail investor, I am not interested in companies who have an expansion potential of just 2x. I would be interested in those companies which have expansion potential of minimum 5x from where they are today. So company feels that they have huge headroom for expansion, but I think otherwise. Now another growth potential for them is into low and no sugar category of products. So today 55% of their volume comes from low or no sugar products, which also includes water and non-carbonated beverages. So company has a good potential to make changes in their product mix and increase this low or no sugar product contribution from 55. They can think of increasing it to beyond to a bigger number. Then the company is diversifying into international markets. Outside of India, company is very bullish on the African market. So company is identifying some of the countries in Africa like Morocco, South Africa, Zimbabwe. So these are some of the countries that VBL is targeting right now. So they see a huge growth potential coming from there. Apart from this, the company is also targeting Sri Lankan market and Nepal as well. So what are some of the risks associated with this company? So you might be observing that most of the countries are levying sugar tax, and in India also products which are loaded with sugar, they fall into sin category. Now very recently government has reduced the GST on most of the products. However, the GST on carbonated soft drink has not reduced. So earlier also it was 40% and now also it is 40%. So VBL has not got the benefit of reduced GST on its carbonated soft drink category of products. However, for the water category, the GST has come down. So they are getting a small benefit. However, water only contributes to 18% of their volumes. So that is not a big benefit or big gain that VBL is going to have by this reduced GST. Then, as you might be also aware that a lot of people are becoming aware and they are ditching these sugar loaded products. So that is one risk that I see with companies, because companies like VBL, because you see their products, they are heavily loaded with sugar, the carbonated soft drinks or products like Tropicana, Slice. So such products, they are heavily loaded with sugar. Now a company have to quickly move to low sugar, no sugar category of products if they want to start catering to people whose consumer behavior has been changing towards non-sugar products. Now weather volatility has always been a risk for companies like VBL, because these products are consumed in summer, and if the summer is not intense, then their sales are directly impacted by that. And this year we have seen the summer was very short, and we had an early onset of monsoon, and the monsoon is prolonged. Like the quarter 2 of this calendar year was a complete washout for them, because the summer was very short, and we can see the rain is still prevalent. We are seeing heavy rainfall happening across India, and I anticipate that the quarter 3 calendar year performance of this company is going to be muted. So this quarter will also be impacted because of heavy rainfall. Now If I talk about their revenue share, like India business is contributing close to 75% and their international business is contributing 25%. So India owns a lion's share in their revenue, and we can see that the growth has stagnated in India. So the growth is not coming from India. It is in single digit, and that is the reason the stock price has stagnated. Right, even if the international market is growing strong for them. So these countries are very small, and the company is right now identifying countries from where they can see the growth coming in the upcoming years. Now, talking about the competition, their biggest competitor is Coca-Cola. So you might be aware of products like Thumbs Up, Limca, Sprite, Maaza. So these are the products from Coca-Cola, and it is in direct competition with VBL. However, Coca-Cola is not a listed company in the Indian market, so we will not be able to see how Coca-Cola is performing and like what market share changes is happening in the carbonated soft drink segment. So that is one challenge here, that we do not have a direct competitor to compare with. Like we do not get to see the financials of Coca-Cola. Then the second biggest competitor is the recently introduced Reliance Campa Cola. So it has been launched with a strong pricing push. So we all know that Reliance is a company with deep pockets, and it has brought disruption in the telecom segment. So similarly, it has the potential to disrupt the beverage market as well in India. So although VBL is not acknowledging that the competition is a threat for them, they feel that the market size is very large and there is a growth runway available for everybody in this sector. However, I feel that yes, they will feel the pinch of competition from Reliance Campa Cola. Although VBL has been able to maintain their margins, like there is no dip in the margin. That is one thing to appreciate about the company. However, going forward, the competition is going to hurt them. This is what I feel. Now let us talk about the Concall updates and what the management has given the updates. So recently I have observed that there has been key management exits that have happened in the company, like the technical head of India operations has resigned in the month of September. The ESG head has resigned in the month of August, and their chief financial officer has been changed in the month of July. So whenever there is a management change, I see it as a black box, because with new people coming, you do not know whether they would be able to run the company in the same way and continue bringing the growth. So we will just have to wait and see that. This is one, I will not say a bad point or a good point, but it's a gray area that I feel. Then the company has been able to maintain its margin. The company has always guided that they will maintain the margin at 21%. Although this quarter was a washout for them, they have given discount to their distributors because of the bad quarter. Despite that, they were able to maintain their margin, which is really a good thing about this company. Now this has happened because the new plants that they have come up with, they are more efficient, and they have optimized their distribution. With that, they were able to make saving in their freight cost. Now the company will need a champion product. Like we have seen, Sting Red has been a champion product, and it has boosted their revenue for 2-3 years in the past. So company will need such products if they want to boost their revenue in India. So the company has come up with Sting Gold. However, because of this short summer this year, so the product was not very well received by people, and it is too early for us to come to a conclusion saying that the product has been failed. The management will continue to push this product in the next season as well, and only after that we will be able to tell whether the product has been a success or a failure. So right now the company is trying to identify key products which can be which can catapult their sales. So Nimbus is one the company is identifying and pushing a lot, because even in this quarter where the summer was very weak, so the Nimbus has seen a good traction. The company is trying to repeat the Sting Red story even with Gatorade. They want to come up with small size and less priced Gatorade, and they want to repeat the same story that they were able to do with Sting Red. Talking about the capex, company do not have any huge plans of capex in India going forward, at least for the next 2-3 years. So they feel that they can only make capex of in the range of 600 to 700 crores, and most of their capex would be focused towards their international markets. On the marketing side, the company is not reducing any marketing spends, and the rate at which they are placing the VC coolers, they intend to grow it by 15% year on year. Now, key takeaways about VBL. So as I had already told you that India market contributes 70%, 75% to the revenue, and there is a stagnation coming in the India market business. There has been a single digit growth here, and that is why you can see the stock price is also not increasing. In fact, it has stagnated. The international market contributes 25% to the revenue. It is growing consistently, but it is very early for us to say whether the story like India can be repeated with the international market as well. Currently, the company has been able to maintain its margin. The company is debt free, and their operations are very efficient. However, we need to see how Campa expands, and if Campa can impact their margins going forward. The Reliance management has announced that Campa has already been able to capture double-digit market share in some of the key markets. When I say about double-digit market share, it is around 14%. So they have not specified which market they are talking about, but they have just mentioned that in some of the key markets, Campa has been able to acquire up to 14% of market share. So although the VBL management is not acknowledging threat from the competition, but we need to be aware that Reliance being a deep pocket company, it will definitely continue to increase their market share, because Reliance also has good retail touch points and they can push their products very heavily, and they can also enter into a price war which will definitely hurt the margins of VBL. Okay, the long-term growth in low sugar water snacks and the international market, like since people are moving away from sugar loaded products, it is important for VBL that they introduce low sugar, no sugar products, and they increase the share of these products if they want to be relevant and if they want to continue growing in today's market. So this was all about VBL. I hope the video was informative and you have gained some helpful insights. For more such videos, please subscribe to my channel. Until then, thank you.